The capital market supported recent issuances by various companies to raise capital. These include 44 billion Kenya shillings, billion Kenya shilling Sharia-compliant leasing bond for infrastructure financing. The Safaricom's Kenya shillings 20 billion green bond to support 5G expansion. The East Africa Breweries PLC Kenya shillings 16.8 billion medium-term note program, and the Kenya shilling 3.4 billion by Spearhead Africa Infrastructure Fund to support long-term infrastructure financing across the region. Mr. Speaker, innovation in market access has advanced significantly with the launch of ZD trading application integrated into the M-Pesa platform. And this groundbreaking platform enables Kenyans to conveniently buy and sell securities through their mobile phones, marking a major milestone in financial inclusion and retail investor participation. Mr. Speaker, Kenya is emerging as a key player in the carbon credit space, leveraging its rich natural resources and a strong base in renewable energy to participate in global climate markets. To actualize formal trading of carbon credits, the government is preparing carbon credit regulations, and these regulations will allow the government and private sector players to benefit through trading of carbon credits generated in Kenya and the region. And Mr. Speaker, in my recent public engagements, coffee farmers raised concerns of continued exploitation by middlemen in the marketing and pricing of their coffee. Mr. Speaker, I want to assure Kenyans that through the reforms the government is implementing at the Nairobi Coffee Exchange, the exploitative middlemen have been eliminated, ensuring farmers retain a much larger share of the export price of their coffee. Farmers today are able to sell their coffee directly at the exchange, supported by their various brokerage firms, majority of whom are owned by the farmers through their cooperative societies. The Nairobi Coffee Exchange has also enabled price discovery, thereby improving earnings by the coffee farmers. And to further support prompt payment of coffee sold through Nairobi Coffee Exchange, the government introduced the direct settlement system that has reduced payment delays across the coffee value chain. Mr. Speaker, coffee's traceability is today a reality. Through the Nairobi Coffee Exchange trading platform and the direct settlement system, cataloging and invoicing, every coffee lot has a unique identification, milling data, warehouse records, auction sales, and buyer data that can be accessed, allowing traceability of coffee from the farm to the buyer. This has created greater buyer confidence of the origin, quality, and authenticity of Kenyan coffee by eliminating coffee laundering. On pension reforms, Mr. Speaker, delayed pension processing has for long been a source of frustration and hardship for retiring public servants. A civil servant who has dedicated their career to public service deserves timely and dignified access to their retirement benefits. Mr. Speaker, to hasten the processing of pension claims, I launched the e-pension management information system on 1st June 2026. Following this launch, we have now discontinued manual submission of pension claim unless expressly authorized by the National Treasury. Mr. Speaker, to ensure this reform delivers a lasting impact, ministries, departments, and agencies are now required to initiate pension claims at least 9 months before a public officer's retirement date. This will facilitate resolutions of late or incomplete submission of pension claims ahead of the retirement date for our employees. Further, the National Treasury, in collaboration with the Kenya School of Government, will institutionalize electronic pension management information system training as part of a continuous capacity building program to ensure sustained competency in pension administration across the public sector. Insurance reforms. Mr. Speaker, to expand access to insurance, the Insurance Regulatory Authority licensed 5 micro-insurance companies in financial year 24-25. This has increased access to affordable insurance, with over 11 million lives covered as of 31st December 2025. Mr. Speaker, to strengthen climate resilience, the government is promoting agricultural and index-based insurance products. Through the drive, which is de-risking inclusivity and value enhancement, livestock insurance project over 2.7 million livestock valued at 29.3 billion have been insured, while payouts exceeding 648 million have supported pastoral communities affected by drought since 2023. Further, the government has initiated amendments to the Insurance Act to establish agricultural insurance as a standalone class of insurance business. This reform will strengthen the regulatory framework for agricultural risk management and support food security, financial inclusion, and sustainable agricultural development. And Mr. Speaker, to deepen local insurance capacity and retain insurance premium within the domestic economy, the government will effective 1st July 2026 require all importers to obtain marine cargo insurance cover from insurance license under the Insurance Act prior to customs clearance. Fiscal policy framework. Mr. Speaker, the implementation of financial year 25-26 budget has remained broadly on course despite emerging pressures on revenue performance and expenditure demands. These developments have necessitated measured adjustments while at the same time informing a more deliberate and responsive fiscal policy stance for the financial year 26-27 and the medium term. And Mr. Speaker, on the revenue front, performance has fallen short of target in the financial year 2025-26. This is due to slower than expected tax receipts, largely driven by administrative constraints and a slowdown in economic activities. At the same time, expenditure pressures have intensified. The implementation of pending and newly negotiated collective bargaining agreements has raised the public sector wage bill beyond initial projections, thereby constraining fiscal space. In addition, emergency interventions in response to floods and drought have required additional resources. As a result of these developments, it became necessary to introduce targeted adjustment through supplementary budget number 1 for financial year 25-26. Mr. Speaker, to enhance tax administration, including upgrading of critical systems and strengthening of compliance efforts, the Kenya Revenue Authority was allocated additional resources in the supplementary budget number 1 for financial year 2025-27, to be exact 17 billion. These interventions are expected to improve efficiency and support a recovery revenue performance. The supplementary budget 1 also reflected additional expenditure of 368.6 billion compared to the original budget to cater for the emerging expenditure pressures. In this regard, the fiscal deficit, including grants, is now projected at 1,199 billion, equivalent to 6.4% of GDP, compared to 901 billion or 4.7% of GDP in the regional budget estimates. Mr. Speaker, fiscal policy is not merely about balancing budget. It is about creating conditions for sustainable growth, protecting the vulnerable and securing prosperity for the future generation. Accordingly, the fiscal policy for 26-27 and the medium term will be anchored on a growth-supportive consolidation path aligned to the government's priorities under the bottom-up economic transformation agenda and the 4th medium-term plan. The policy will prioritize enhanced domestic revenue mobilization, strengthen expenditure control, and strategic reprioritization of public spending. This approach aims to reinforce public debt sustainability and safeguard essential public service. Now let me turn to domestic revenue mobilization. Mr. Speaker, every shilling of development begins with every shilling of revenue collected fairly, efficiently, and transparently. To boost revenues, the government will continue to strengthen implementation of the national tax policy and medium-term revenue strategy, aimed at simplifying tax laws, rationalizing tax expenditures, and creating a fair, predictable, and efficient tax systems. Mr. Speaker, the Kenya Revenue Authority has intensified reforms to modernize tax administration, enhance compliance, and improve service delivery through technology and innovation. Notable progress has been made in expanding the electronic tax invoice management system, with over 655,000 taxpayers now onboarded, significantly enhancing transaction visibility and strengthening VAT compliance. Integration between iTax and customs systems has improved end-to-end taxpayer visibility, while the rollout of the electronic rental income tax system has simplified. I want to repeat that. While the rollout of the electronic rental income tax system has simplified compliance with the rental sector. So we have already implemented the system that I think some people are still dreaming about out there. Mr. Speaker, the Kenya Revenue Authority has also strengthened enforcement through data-driven compliance strategies, artificial intelligence, and non-intrusive cargo scanning technologies, enhancing the detection of illicit trade and reducing revenue leakages. As a result, The active taxpayer base increased by 82,000 to over 6.6 million taxpayers as at March 2026 from 6.5 million as at March 2025, reflecting a growing voluntary compliance and improved taxpayer engagement. And I want to thank Kenyans for this. Mr. Speaker, service delivery and trade facilitation have equally improved through initiatives such as Huduma Popote and enhanced customs systems, which have reduced cargo clearance times and improved operational efficiency. Mr. Speaker, in the financial year 26-27, Kenya Revenue Authority will intensify reforms to strengthen revenue mobilization, modernize tax administration, and improve taxpayer experience through the following measures. Number one, roll out integrated digital tax administration and revenue monitoring systems, including the domestic tax administration system, expanded electronic invoicing, virtual electronic tax registers, enhanced point-of-sale integration, and the e-customs mobile application to improve efficiency, compliance, and real-time visibility of transactions. Number two, implement device identification and registration and strengthen exchange of information frameworks to combat tax evasion, illicit trade, and cross-border revenue leakages. Number three, simplify taxpayer processes through pre-populated returns, streamline digital payment solutions, and expanded digital service delivery platforms to reduce the cost and burden of compliance. And number four, expand taxpayer outreach and support through initiatives such as Ushuru GPT, Omni-channel customer engagement system, Huduma Popote, and Ushuru Mashinani to enhance accessibility and responsiveness. Number five, strengthen enforcement, compliance, and revenue assurance through advanced data analytics, artificial intelligence, and integrated investigation and case management system. And number six, invest in core ICT infrastructure, integrated enterprise platform, and cybersecurity system to safeguard the integrity, resilience, and efficiency of revenue administration. So, Mr. Speaker, the government will continue to scale up non-tax revenues by strengthening the capacity of ministries, departments, and agencies to efficiently generate income from public services while enhancing their operational systems to improve efficiency and overall revenue performance. Now, I want to speak to improving efficiency of the public expenditure. Mr. Speaker, raising revenue is only half the equation. Ensuring that every shilling delivers maximum value is equally important. And in order to improve the efficiency and value for money of public expenditure, the government is implementing targeted reforms to strengthen expenditure controls, enhance transparency, and improve public sector efficiency. These reforms include the full rollout of e-government procurement, completion of key treasury single account reforms, and transition to accrual-based accounting to strengthen cash management, fiscal oversight, and financial reporting. The government will also deepen public financial management reforms through the entrenchment of zero-based budgeting, digitization and automation of pension and payroll administration, and strengthen human resource management system to enhance efficiency, accountability, and service delivery across the public sector. Further, the government will optimize the management of public assets and liabilities, accelerate state corporation reforms and targeted privatization, and scale up the use of public-private partnerships to provide private sector or private capital, improve efficiency, and support delivery of commercially viable projects. Mr. Speaker, allow me now to expound on some of the expenditure reforms that we are implementing. One, migration to accrual accounting. Mr. Speaker, effective public finance management begins with what we own, what we owe, and how public resources are being utilized. To improve cash management, the government is implementing one of the most significant financial management reforms in Kenya's history. The transition from cash basis to accrual basis of accounting under the International Public Sector Accounting Standards. Following cabinet approval of the transition roadmap in March 2024, implementation commenced in financial year 2024-25 through a structured three-year phased approach led by the National Treasury. Mr. Speaker, this reform fundamentally changes how government accounts for public resources. For the first time, Kenya's financial statements will present a complete and accurate picture of the country's financial position, capturing not just cash flows, but all public sector assets, liabilities, revenues, and expenditures. Public debt obligations, infrastructure assets, inventories, receivables, and payables will all be recognized and reported transparently, giving Parliament, citizens, and investors a true account of the nation's financial health. Mr. Speaker, implementation is progressing as scheduled across 3 phases. The first phase addressed financial assets and liabilities. The current phase incorporates inventories and prepayments. The final phase will bring in all remaining assets and liabilities, culminating in full consolidation of public sector entities, that is, consolidation of financial statements. To support this transition, the government is upgrading IFMIS and related systems, strengthening public sector asset management framework, undertaking asset identification and evaluation exercises across ministries, departments and agencies, counties and other public entities, and building capacity among public officers to sustain the reform beyond its implementation period. Mr. Speaker, this reform is not just about accounting standards. It is about accountability. It's about ensuring that those entrusted with public resources can be held to a higher standard of transparency and reinforcing public confidence in the stewardship of national resources. Number 2 is the treasury single account. Mr. Speaker, as I had informed this House in last year's budget statement, the government has been implementing the treasury single account framework to strengthen cash management and improve efficiency of public financial operation. Following the successful rollout of the treasury single account to all ministries, the government has reduced the cost of overdraft financing from Central Bank of Kenya by 61% in this financial year, translating into substantial savings. I want again to pause there. I saw some people talking about reforming this so that there can be saving. I want to repeat that the government has reduced the cost of overdraft financing from Central Bank of Kenya by 61% in this financial year, translating already into substantial saving. So the work that you intend to do is actually already done. Mr. Speaker, the implemented treasury single account model directly links invoices to specific batches submitted by ministries, departments, among other enhanced features. These treasury single account reforms have substantially improved the efficiency of government exchequer operations, delivered transparency in exchequer and cash management, and ensured that public funds are released only against verified and approved obligations, thus laying the foundation for managing pending bills, and there is going to be no more cherry picking of invoices for payments. So, Mr. Speaker, building on this momentum in the financial year 26-27, the government will expand or extend the treasury single account framework to county governments by completing the automation of county exchequer requisition processes, after which counties will progressively migrate to a treasury single account architecture mirroring that of the national government. And 2, operationalize in collaboration with the CBK a granular data integration system to deliver real-time visibility of the cash and liquidity positions of state corporations and semi-autonomous government agencies. Mr. Speaker, taken together, these reforms represent significant modernization of our public cash management architecture. They are already delivering measurable savings, deepening fiscal transparency, and strengthening our capacity to deliver value for every shilling of public money. Let me now talk about strengthening the internal audit oversight and fiscal discipline. Mr. Speaker, every shilling entrusted to government must be accounted for and deliver value to the people of Kenya. The recurrence of audit queries and delays in implementing audit recommendations across public institutions continue to expose public resources to fiscal risk and weaken service delivery. And Mr. Speaker, to strengthen accountability, fiscal discipline, and support the government's zero-fault audit initiative, the government will introduce amendments to the Public Finance Management Act and related regulations to strengthen the mandate of the Office of the Internal Auditor General, and enhance oversight across the public sector. I am strengthening the Office of the Internal Audit. The reforms will establish a framework for tracking the implementation of audit recommendations and resolutions issued by Parliament, the Office of the Auditor General, audit committees, and other oversight institutions, with clear accountability mechanisms for non-compliance. The government will also strengthen internal audit functions across public entities, roll out integrated internal audit management system, and enhance the adoption of enterprise risk management to improve the identification and mitigation of fiscal and operational risk. Mr. Speaker, these reforms will strengthen transparency, internal controls, and prudent management of public resources while improving accountability and service delivery across government. Now let me turn to revenue projections for 2026-2027. Mr. Speaker, our fiscal projections reflect a careful balance between ambition and realism, ensuring that we live within our means while investing in our future. Based on the outlined policy measures, total revenue collection, including appropriation in aid for the financial year 2026-27, is projected to be 3,630.5 billion, which is equivalent to 17.4% of our GDP. Of this, ordinary revenue is projected at 2,985.7 billion, equivalent to 14.3% of the gross domestic product. And ministerial appropriation in aid is projected at 644.8 billion, equivalent to 3.1% of GDP. Grants are projected at 43.6 billion or 0.2% of GDP. Expenditure projections. Mr. Speaker, total expenditure in the financial year 2026-27 budget is projected at 4,820.4 billion, equivalent to 23.2% of GDP. And of this, recurrent expenditure will amount to 3,568.4 billion, which is equivalent to 17.1% of GDP, and development expenditure, including allocations to domestic and foreign finance projects, contingency fund, and equalization fund, will amount to 750 billion shillings, which is equivalent to 3.6% of GDP. Total allocation to county governments is projected at 502 billion shillings, of which 428 billion is equitable share, and 74 billion is additional allocations from the national government's share of revenue, and loans and grants from development partners. So 16.6 billion national government, and loans and grants 57.4 billion. Financing deficit, fiscal deficit and financing. Mr. Speaker, the resultant fiscal deficit, including grants, is projected at 1,146.2 billion, equivalent to 5.5% of GDP. The fiscal deficit will be financed by net external borrowing of 116.2 billion, equivalent to 0.6% of GDP, and net domestic borrowing of 1,030 billion, which is equivalent to 4.9% of GDP. Public debt management. That leads us to discussion on public debt management. Mr. Speaker, debt is a tool for development, but only when managed prudently and sustainably. To preserve debt sustainability and strengthen economic resilience, the government will continue implementing fiscal consolidation measures anchored on enhanced domestic revenue mobilization, strict expenditure controls, and improved efficiency in public spending. Given these reforms, the present value of public debt to GDP is projected to decline steadily towards the approved debt anchor over the medium term. Mr. Speaker, in pursuit of the strategic objective of strengthening debt portfolio diversification, the National Treasury is actively advancing a range of innovative financing instruments. These initiatives are designed to broaden the investor base, optimize the cost risk profile of public debt, and enhance overall resilience in debt management. In this regard, the government is considering thematic and liability management instruments such as debt for food swaps and debt for development swaps. These instruments provide an opportunity to convert external debt obligations into targeted investments that directly support national priorities, including food security, sustainable development, and social infrastructure, while simultaneously easing debt service pressures and reinforcing fiscal sustainability. Mr. Speaker, further to this, the government is also evaluating opportunities to access new and diversified international capital markets. This includes the potential issuance of samurai bonds in the Japanese market, and a lot of progress has been made in this area, and panda bonds in the Chinese domestic market. By tapping into these markets, the government stands to benefit from deep and diversified pools of capital, secure potentially competitive financing terms, and promote currency diversification within the debt portfolio, thereby reducing reliance on traditional funding sources. Mr. Speaker, complementing these efforts and in recognition of the growing global